Hi guys, welcome to a multi-timeframe market structure video. So since we already know that in a trending market, right, we're creating higher highs, higher lows, and higher highs and higher lows in an uptrending market, of course, and then it would be the opposite in a downtrending market. So from your highs, you'll have lower highs and lower lows. In this specific recording, I'm just showing an example of a multi-time frame market structure in an uptrending market, and it's self-explanatory for the downtrending market. Okay, so as you can see here on the screen, we have our white line, which would be our higher time frame market structure, right? And then our yellow lines would be our shorter time frame, our lower time frame market structure. So this just comes and shows how important, knowing the direction of the market, knowing what the higher time frames are telling you. So by looking at this on the higher time frames and by identifying these highs and these lows and these higher highs and the higher lows, we know that overall we are in an uptrending market. Okay, so this is a clear uptrending market. Now, given this information, we can now understand that if, let's say, we're trading within this impulse up, we know that these higher highs and higher lows and higher highs and higher lows on the smaller time frames is going within the trend. So we know that if we're uptrending, we know that, right? If we're creating a higher high here, we know that we should be breaking the previous highs. So if you're taking a trade within this area or this area or this area for XYZ reason, right? So remember, we trade based on a confluence, on different points of confluence. So whether it's, market structure, trend lines, EMAs, whatever your confluence is and giving you a reason to buy, we know that we're buying within the higher time frame trend, right? So then your targets can be much greater than in the case of a counter trend trade. Okay, we're not going to go into details right now to that, so we're just going to keep going within this trend here. So if we're taking a trade here, we know that a really good target would be at the previous highs, right? And then we can go and try and reach our extension target. So this could be your first extension level, and this could be your second extension level. And we can determine those extension points based on Fibonacci's. In the previous videos, you have seen roughly, how to use Fibonacci levels, but there will be a more advanced section to that, okay, to really pinpoint where to exit your trades, or even better, to take partial profits and, of course, manage your trade and manage your risk in that sense. Okay, so in the other hand as well, it's really important to understand as well. So once we kind of reach those extension points and, other reasons telling you that, okay, this could be a potential new high, and then we can start creating a pullback. So this pullback on the higher time frame, let's say the daily, we understand that we are counter trending on the higher time frames, but the lower time frames will be downtrending. And you can tell with this market structure with the yellow line. So you can clearly see this is your high, your low, lower high, lower low, lower high, lower low, and so on. And this is confirmed once price breaches the previous low here, creating this low here, then comes back, creates a lower high because it failed to, to continue within the uptrend, right? We're not seeing this. We're seeing downtrending markets on the lower time frames. So it's important to understand, yes, we are downtrending on our lower time frames, for example, the 1 hour time frame, but on the daily time frame, your higher time frame picture, we're just making a correction within this bigger, picture where we are uptrending. So we understand that markets move in an uptrend. We're creating, an impulse to the upside, correction, impulse to the upside once again, right? So this is just a correction on the higher time frames, and we're kind of waiting for different points of confluence to tell us, okay, this is potentially your new low, and we can go and buy, to your previous highs and then to your next extension levels. So this was just a rough example on how you can really look at multi-timeframe analysis. It's extremely important to first identify, the direction of the markets on the higher time frames, and then try not to get lost in the lower time frames when you're trading. It's easy to forget that, yes, we are, in a downtrending market on the 1 hour, but your targets are not going to be the same as if you were buying within an uptrend, right? So this move here is much smaller than this move over here. So if we measure these from this high to this low, we have, 120 pips, you can see over here. And then if we measure from this low to this high, we have 195 pips, okay? Now this is obviously just a sketch that I did, but in general, if you're uptrending, your impulses are greater than your corrections. And it's in your benefit to trade within the trend, but the more experience you get trading the markets, the more you'll be comfortable trading these counter trends. But it's important to understand, what environment you're trading in and not getting lost in the lower time frames.